3D was supposed to save the movie industry, but U.S. attendance fell almost 10% in 2010, and ticket receipts were down as well. Disney had some 3D hits with Toy Story 3 and Alice in Wonderland, but Tron Legacy hasn't lived up to its massive billing, so how is 2011 going to stack up for Disney shareholders? We're asking a Bloomberg best analyst on media, David Bank. He's with us from RBC Capital Markets offices here in New York City. David, studios for Disney bounced back in fiscal 2010 from a dismal 2009. But what is this disappointing start for Tron going to mean for Q1, which ended just last month, and Q2? We're in it right now, and Tron's still in theaters.
Yeah, I think at the end of the day, these companies are so driven by their cable operations that the studio operations themselves, even when you have a big miss like this, probably isn't going to be that much of a needle mover. What I think we're going to have to wait and see is how many Tron lunch boxes and things like that got sold, and the chatter is actually okay. On that stuff, so we have to see what the blend between consumer products and the studios are. But I don't think this is going to hurt them too much. I think we would have liked to have seen them create a new franchise, though. That would have been very helpful.
Is the story on the upside the same as the story on the downside, which is to say limited on both fronts? Or when Cars 2 comes out later this year and we get Pirates of the Caribbean 4, might it actually goose Disney revenue and thus the stock a little bit more than...
Yeah, well, I think at the very least, it represents a catalyst, and that's what you look for in any of these stocks. They're basically, business trends are basically good for all of them across the board. We feel really good about advertising, and we feel generally pretty good about even the studio business. You need that catalyst. And these are huge movies, both from a movie perspective and a consumer products perspective. So I think those are the events you're waiting for. How much upside do they represent? I think the stock is trading relatively cheap right now, so it's not like you need that much upside relative to its historical multiples.
Trading cheap, but this is after...
You just need a reason to get into the stock.
But this is... Okay, so there are reasons to get into the stock even after a run of almost 17% last year.
Yeah, absolutely. Absolutely.
Let's talk a bit about cable, because you said that for these stocks like Disney, they really trade on what's going on in the cable business, particularly ESPN, or at least let's call it, networks. They've got ESPN, they've got ABC. How are the prospects for that business heading into 2011? They seem pretty strong with advertising robust coming out of 2010.
Yeah, I mean, look, there's two forces at work. One is advertising, and the other is affiliate fees. Affiliate fees are contractually driven. And advertising trends are pretty readable right now as being strong. So, with 60% of the OI coming from that business, very little comes from ABC. It's really more the cable networks. The trends are very strong. I think in the long term, and we've talked about it, a lot of questions have been raised about the viability of the cable model. When you look at people concerned about cord cutting and turning to Netflix or Hulu or other ways of watching TV, but the reality is for today, we're really just not seeing that much erosion of the core fundamentals. So I think that any concern about the cord cutting stuff, if it hits the stocks, is a real opportunity for stocks like Disney.
All right, David, thanks for joining us as always. David Bank, he's a Bloomberg Best. He's an analyst at RBC Capital Markets. We're talking to him about Disney. He rates the stock outperform and says Tron Legacy's disappointing start isn't going to have too much impact on Disney shares.